Hello, friends. Right now, millions of seniors across this country are paying bills every single month that they are legally not required to pay. Not because they have to, not because the law requires it, but because nobody told them they don't have to. I'm not talking about skipping bills. I'm not talking about anything illegal. I'm talking about exemptions, waivers, and protections that exist specifically for seniors, written into federal and state law, that the companies collecting your money have absolutely no incentive to tell you about. And the worst part? Some of these exemptions expire if you don't claim them. The longer you wait, the more you pay. And once that money is gone, it doesn't come back. If you are 60 or older and you receive Social Security, a pension, or any fixed income, stay with me for the next 10 minutes. Because by the end of this video, you will know exactly which bills to stop paying, which exemptions to apply for, and what to say when you make the call. This is money you have already earned. You are already entitled to it. You just need to know how to claim it. Before I get into the 5 bills, if you are not subscribed to this channel, please do that right now and turn on the bell. Here's why it genuinely matters. The rules around senior exemptions, Social Security benefits, and Medicare protections change constantly. And when they change, the companies charging you those bills do not send you a letter explaining that you now qualify for an exemption. They keep sending the invoice, they keep processing the payment, and they count on you not knowing. What I do on this channel is take those changes, break them down by what they actually mean for your specific financial situation, and get that information to you before the deadlines pass and before the money is already gone. The people subscribed here find out in time. The ones who aren't tend to find out after another year of overpaying, after the exemption window closes, after hundreds or thousands of dollars have already left their account. Hit subscribe, turn on the bell, and let's get into the 5 bills. Bill number 1, property taxes. This is the largest exemption on this list, and the one that the most seniors are missing right now. Every state in the United States has a property tax exemption program specifically for seniors. Every single one. Some states call it a homestead exemption. Some call it a senior freeze. Some call it a circuit breaker program. The names are different. The mechanism is different. But the result is the same. If you are over a certain age and your income falls below a certain threshold, you are legally entitled to pay less in property taxes, sometimes significantly less. Here is how significant this can be. In Illinois, the Senior Citizens Assessment Freeze locks your property tax assessment at the level it was when you first qualified. If your home value increases, your taxable assessment does not. Seniors in Cook County alone are saving an average of $400 to $800 per year through this program. In Texas, seniors over 65 qualify for an additional $10,000 exemption on top of the standard homestead exemption. And school district taxes are frozen entirely. In New York, the Enhanced Star program reduces the assessed value of your home by up to $70,700 for qualifying seniors, which translates to hundreds of dollars off your annual tax bill. Now here's the problem. These exemptions are not automatic. You have to apply. And in most states, there is a deadline, typically in the spring, and if you miss it, you wait another full year. Every year you don't apply is a year you overpaid. Here is what to do right now. Call your county assessor's office or visit their website. Search for Senior Property Tax Exemption plus your county name. Ask specifically whether you qualify and what documentation you need. The typical requirements are proof of age, proof of residency, and proof of income. In most cases, your Social Security statement is sufficient for the income requirement. Do not assume you don't qualify because your home has a high value. Many of these programs are based on income, not home value. And do not assume someone already applied for you. Unless you personally submitted that application, it has not been filed. Bill number 2, utility bills, electric, gas, and phone. If you are on a fixed income and you are paying full retail rate for your electricity, your gas, and your phone service, there is a very real chance you are overpaying by $50 to $150 every single month. Let's start with electricity and gas. The Low Income Home Energy Assistance Program, LIHEAP, is a federally funded program that helps seniors and low-income households pay heating and cooling bills. In 2026, the income threshold for LIHEAP eligibility is 150% of the federal poverty level, which for a single-person household is approximately $22,000 per year. If your income falls below that, you may qualify for direct bill assistance ranging from $200 to $1,000 per year depending on your state. But LIHEAP is only one layer. Most major utility companies, including Duke Energy, Dominion, Pacific Gas and Electric, and others, have their own low-income senior rate programs completely separate from LIHEAP. These programs reduce your base rate by 20 to 30% every single month. They are not advertised on your bill. They are not mentioned when you call customer service unless you specifically ask. You have to request them. Call your electric and gas company and say these exact words. I am a senior on a fixed income. Do you have a low-income senior rate program or a budget billing exemption I can apply for? That question will either get you transferred to the right department or it will get you a form to fill out. Either way, you will get an answer you are not currently getting by doing nothing. Now for phone service. The Lifeline program is a federal program that provides a discount of up to $9.25 per month on phone or internet service for qualifying low-income households. For people on tribal lands, that discount goes up to $34.25 per month. If you receive Medicaid, Supplemental Security Income, or the Federal Public Housing Assistance Program, you automatically qualify for Lifeline. You do not need to apply separately or prove income. Your participation in those programs is sufficient. Over the course of a year, the phone discount alone saves a qualifying senior $111. Combined with the utility rate reduction and LIHEAP assistance, we are talking about a total of $500 to $1,500 per year, money that should be staying in your account. Bill number 3, Medicare Part B premium. I covered this briefly in a previous video, but I want to go deeper here because this is one of the most significant bills a senior can reduce. And the process to do it is something almost nobody walks through step by step. The standard Medicare Part B premium into 26 is $185 per month, but if your income is above a certain threshold, SSA charges you more. This is called the IRMAA surcharge, the income-related monthly adjustment amount. The surcharges range from an additional $70 per month all the way up to nearly $500 per month on top of your base premium. Now here is the critical thing to understand. SSA calculates your IRMAA surcharge based on your tax return from 2 years ago. So if your income in 2024 was elevated because you sold a property, did a Roth conversion, had a large one-time capital gain, or experienced any other single-year income spike, you may be paying an IRMAA surcharge right now in 2026, based on income you no longer have. SSA has a form specifically for this situation. It is called Form SSA 44. It is titled Medicare Income Related Monthly Adjustment Amount, Life-Changing Event. The qualifying life events include retirement, reduction in work hours, divorce, death of a spouse, loss of income-producing property, and employer settlement payments. If any of those apply to your situation, you can file SSA 44 and request that SSA use your more recent, lower income to recalculate your premium. Here is how to do it. Download Form SSA 44 directly from ssa.gov. Fill out Section 1 with your personal information. In Section 2, identify which life-changing event applies to you. In Section 3, provide your modified adjusted gross income estimate for the current year. Attach supporting documentation. Your most recent tax return, a letter from your former employer confirming retirement, or whatever is appropriate for your specific life event. Then submit it to your local SSA office either in person or by mail. If you are currently paying more than $185 per month for Medicare Part B, look at your bill right now and identify the specific line item. If there is an IRMAA surcharge listed, that is the number you can potentially eliminate. On a $300 per month premium, that is $115 per month going back in your pocket, $1,380 per year for filing a single form. Bill number 4, prescription drug costs. If you are paying full price for prescription medications, even with Medicare Part D coverage, there are 2 programs that can dramatically reduce or eliminate that cost, and the majority of seniors who qualify for them are not enrolled. The first is the Extra Help program, also known as the Low Income Subsidy. Extra Help is a federal program administered by SSA that pays for most of your Medicare Part D costs, premiums, deductibles, and copayments. In 2026, if your annual income is below approximately $22,500 for a single person or $30,000 for a married couple, and your assets are below $17,220 for a single person, you may qualify for full or partial Extra Help. What does full extra help actually mean in dollar terms? It means your Part D premium drops to zero or near zero. It means your deductible is eliminated. And it means your copayment for each prescription is capped at $4.50 for generic drugs and $11.20 for brand name drugs, regardless of what that medication actually costs. For seniors taking multiple medications, the annual savings can exceed $5,000. To apply for extra help, go to ssa.gov and search for extra help, or call SSA at 1-800-772-1213 and ask to apply over the phone. The application takes approximately 30 minutes and requires basic information about your income and assets. If you qualify, SSA notifies you by letter and your Part D plan is automatically updated. The second program is the Medicare Savings Program, which is administered at the state level through Medicaid. There are 4 levels of the Medicare Savings Program: QMB, SMB, QI, and QDWE, and each one covers a different portion of your Medicare costs. The QMB program, which stands for Qualified Medicare Beneficiary, is the most comprehensive. If you qualify for QMB, the program pays your Part B premium entirely. That is $185 per month back in your pocket. Plus it covers your Part A and Part B deductibles and copayments. To apply for the Medicare Savings Program, contact your state Medicaid office. You can find the contact information by going to medicare.gov and searching for Medicare Savings Programs. The income thresholds vary by state, but in most states, a single senior with income below $1,660 per month qualifies for at least one level of assistance. Bill number 5. Credit card interest and bank fees. This one is different from the others on this list because there is no single federal exemption program. But there is a process, and it is one that most seniors do not know they can use. If you are carrying a balance on a credit card and paying interest, you can call your credit card company and request a hardship rate reduction. Every major credit card issuer has a hardship program. These programs exist specifically for customers experiencing financial difficulty, including seniors on fixed incomes. A hardship rate reduction can drop your interest rate from 24% down to 9% or lower, sometimes to 0, for a period of 6 to 12 months, with the possibility of renewal. The key is how you make the request. Do not call and simply ask for a lower rate. Call and say specifically, "I am a senior on a fixed income and I am experiencing financial hardship. I would like to speak with someone in your hardship or financial assistance department about a rate reduction." That language gets you transferred to a different team with different authority than the standard customer service representative. Similarly, if you have a checking or savings account and you are being charged monthly maintenance fees, minimum balance fees, or overdraft fees, call your bank and ask whether they have a senior account or a fixed income account that waives those fees. Most major banks, including Chase, Bank of America, and Wells Fargo, have account types specifically structured for seniors that eliminate monthly fees entirely. These accounts are not always advertised at the branch level. You have to ask for them by name. Between the interest rate reduction and the elimination of bank fees, a senior carrying $5,000 in credit card debt and paying $15 per month in bank fees could save over $200 per year, simply by making 2 phone calls. Let me bring this together before you go, because the action items are what matter here, not the information by itself. Number 1, call your county assessor's office this week and ask about the senior property tax exemption. Find out the deadline and what documentation you need. Do not wait until spring. Find out now so you are ready when the window opens. Number 2, call your electric company, your gas company, and your phone carrier. Say specifically that you are a senior on a fixed income and ask whether a low-income rate program or Lifeline discount applies to you. Number 3, look at your Medicare Part B premium right now. If it is above $185 per month, download Form SSA 44 from ssa.gov and find out whether a recent life-changing event qualifies you to appeal. Number 4, go to SSA Extra Help with your Medicare Part D costs. If you are below the income threshold, this single program can save you thousands of dollars per year on prescription medications. Number 5, call your credit card company and your bank. Use the word hardship. Ask for a rate reduction and ask about fee-free senior accounts. These calls take 20 minutes and the savings are immediate. These are not things to put on a list and come back to later. Every month you wait is another month of overpaying. The exemptions exist right now. The programs are funded right now. The only thing standing between you and this money is the phone call you have not made yet. If you have a parent, a sibling, a neighbor, or a friend who is a senior on a fixed income, send this video to them today, not next week, today, because this information is only useful if it gets to them before another bill goes out. Subscribe and turn on the bell. I cover these exemptions, these deadlines, and these SSA updates every single week. In my next video, I'm covering the survivor benefit mistake that widows and widowers are making right now. And if you lost a spouse in the last 5 years, that video applies directly to you. I'll see you in the next one.